Up first, we have Andrew Pollard, President, CEO, and Director of Blackrock Silver.
Very, very good to be here. It's nice to know that there's still some very brave, daring souls out there taking a look at silver. Listen, it's going to put hair on anyone's chest when a commodity goes from 26 bucks an ounce down to 18 dollars an ounce in the span of 3 months. But for those actually looking at making new investments, I can't think of a better time to listen to stories, get a sense of what's out there, and then figure out how you're going to allocate your money because the best cure for low prices is low prices generally, and I think what BlackRock's doing is one of the most compelling stories out there in the industry. I'm certainly going to be making some forward-looking statements. If you're not going forward, you're going backwards, and what we're doing here at BlackRock is really just focus on deploying capital to get a big return on investment. Some of you might have seen that, I guess just a few days ago, last Friday, we announced the $6 million financing, which the good people at Red Cloud and PI helped lead. And this was really interesting. One, it allows us, well, one, the financing window open for the first time in many months to do a large scale deal like this. And it was nice to know that demand was there because we're able to raise money in what is the worst market in junior mining, certainly in my career, but we're doing it with a half warrant. Now, it's of note that we just had 5 million warrants drop off our registry, expire just last week. So this is actually really, really minimal dilution on our market cap or on our share structure, and it gives us $6 million to play with and deploy. And the reason we're doing this was we have drills turning at the site. We've never stopped drilling since we picked up our asset in June of 2020. But those drills are set to wind down on our original resource expansion program. About 2 weeks ago, we hit on the mother of all step outs. We did what would be the equivalent of a Hail Mary. We stepped out 1 kilometer on a vein system and we nailed it. We hit something 4.6 meters thick, over 200 grams per ton silver equivalent, and within that, it had grades up to 700 grams. So what we've established is the high grade shoots on our system. And for those that aren't aware, our project is the #1 highest grade resource stage project in the entire industry right now. We've just established those shoots go a full kilometer, effectively doubling the size of the footprint of mineralization we just backstopped with our maiden resource. So it's a no-brainer to take this money, keep the drills going, and we've just got another kilometer strike potential to do this. Another thing worth mentioning is that, I just said that 5 million warrants dropped off our registry just last week. Every single warrant in the company right now is set to expire and fall off the registry between now and November of next year, meaning we're in a unique situation that either that this time next year, our fully diluted share capital is probably going to be a heck of a lot tighter than it is right now. And this sets up us with some serious room to run because the next real big leg up in terms of warrants, they're priced at $1.10. Today we're trading around 50 cents. That gives them some serious runway should the tides turn and should we be able to keep putting out high grade intercepts without having to chew through much in the way of overhang. And now that we're fully financed, we've reduced any, further financing risk, and we're able to keep the drills well fed, keep going, and we'll be able to keep the rigs going beyond that. Sorry, let me just okay. So since we picked up our project in April of 2020, we've been, a true discovery story. Out of 25 silver exploration development companies out there, we've put up the third best performance in terms of shareholder returns. In April of 2020, we had a market cap roughly about $10 million. Today we're around 85 million, and I'm pissed off about it. What we have, though, is a very clear, compelling path forward to add ounces. We're a high-grade story, and we command a premium because of that. And we're also in Nevada, which is the other big thing we've got going for ourselves. So, what is our project? We've consolidated one of the most significant high-grade silver districts in North America, and we've done this for the first time since exploration shut down on the property production shut down on the property in 1930s. This district in 30 good years produced 174 million ounces of silver and 1.86 million ounces of gold. But the best part was that was all from 7.5 million tons. This is a high grade district and it's only silver and gold. roughly 100-to-1 silver and gold ratio. So that makes us very unique. There's nothing else going into our silver equivalents. There's no lead, no zinc. There's no financial engineering when we put this out. It's just silver and gold, and we've got grade. Our proof of concept really was what we wanted to test for when we got the project was very simple. We wanted to prove that the old timers didn't shut down because they ran out of metal. They shut down because of low metals prices at the emergence of the Great Depression. And our first drilling, when we inherited a drill hole database of one drill hole on the portion of our project that the entire resource covers. Since then, we've become one of the most active exploration stories in the industry. We've completed 140,000 meters of drilling in over 2 years. And on a year and a half worth of that drilling, we just backstopped our valuation with 42 million ounces of silver equivalent at 446 grams per ton, mining diluted silver equivalent grades. That means we've already factored in dilution into this, meaning we've cut that down by about 20 to 30% actively versus an undiluted figure, which is how most people would present theirs. What we're showing is those old timers sure left a lot behind, but also this looks like a very rich, robust deposit. Anytime your average grade is more than double the cutoff grade, you're in a good situation. You should be making money hand over fist. If any cutoff grade you use with our in terms of our sensitivity analysis, our average grade is generally more than double. And this is, as I said, is the highest grade deposit out there right now. Number two ain't even close. So what we're doing right now, effectively, now that we're backstopped with ounces in the ground, we're effectively a leverage call option on the price of silver. Obviously silver prices go up and down. Our ounce of the ground valuation should move with that, but we've got ways to outperform the market because, we can increase that ounce of the ground valuation by obviously the tides coming back. Other option is to add more ounces, and that's what we're doing right now. As I said, we've stepped out a full kilometer beyond our resource area just 2 weeks ago, and we're putting 15,000 meters worth of drilling towards adding that into our next resource update very soon. And the other way to add value is obviously de-risk the project and move it closer to production. Now, to put our resource in context with the company that commands the highest ounce in the ground valuation, Silvercrest, our maiden resource and Silvercrest maiden resource is exactly the same in terms of what they put out with Las Chispas. We just constrained ours differently. So Las Chispas in 2018, they put out 3.4 million tons at 572 grams per ton, undiluted grade. We put out 3 million tons at 446 grams per ton, diluted mining grade. Roughly, it's the same grade. They actually came out with more tons. Now, here's the difference. We stope optimized ours, meaning we cut off all the fat, meaning everything in our resource has to be within a mineable shape and deemed economically viable. The other thing we did is we accounted for metallurgical recoveries, which they did not. That alone cuts down the tonnage to make theirs actually less than ours. What I'm getting at is Silvercrest started from the exact same footing that we are right now, and they command the highest grade ounce in the ground valuation. Just like our project, they're just silver and gold. The only difference is that we're not Mexico. We're halfway between Las Vegas to Reno on private land at that, and we're walking distance to a town. So this area was discovered in 1900. It was discovered at that point in Nevada. The only people remaining after the Comstock lode petered out were cattle ranchers and First Nations. And Tonopah was discovered in 1900 by a cattle rancher and his mule. He was walking in the middle of nowhere, came across this big outcropping vein, and thus one of the most significant discoveries in American history was born. This led to a massive, massive gold rush, the last real gold rush in America before World War I happened. And this chart you see here is the average production. They started mining these veins right away right from surface and up to about 12 to 13 million ounces silver equivalent production per year within a span of about 10 years. Obviously, things tanked around World War I, but the nail in the coffin for the district was in 1923 when they unpegged the price of silver. Went from $1 an ounce down to 25 cents an ounce in the early 30s and sent everything in the district belly up. This is what the district looked like in 1912. There was lots of big-time mining companies in there, and they were all publicly traded, generally either on the Philadelphia or the San Francisco Stock Exchange. What we've done is we've consolidated the western half of this district and brought together a bunch of independently owned parcels for the first time and gone in and brought exploration to them since production shut down. What you'll see here, I told you the proof of concept we were trying to do was just see if the old timers truly did shut down. The story of our properties, the story of the workings on our is the story of the workings, the underground mines. You'll see the northeastern portion of our project, which we call Victor. They mine that down on many levels, all the way down to around 1,880 feet. Where they stopped mining that, the vein was 24 meters thick. They then drifted across to the central part of the property and did a bunch of development, but never got around to extracting ore. What we've shown is they shut down right as they're about to go into production on this area. What we've shown is that the veins they're preparing to mine go all the way out here now. We've shown 42 million ounces left behind, and our resource area was really just the central part. It really just covers the central part of the district they were preparing to mine and didn't get around to it. And then the Victor zone in the northeastern portion, where I told you they stopped mining, where the vein was 24 meters thick. Our first drill hole hit 29 meters of a kilogram per ton silver equivalent and put about $100 million on our market cap overnight that day. As I said, it's high grades. We've hit up to 5 kilos silver equivalent, up to 3 kilos silver, 24 grams gold. And we're getting huge leverage via the drill bit. So to get our ounces, it cost us 62 cents per ounce in discovery costs, all in. That's including the project, including all the drilling, including all G&A. We're trading significantly more. So what we're going to do is it's an easy proposition to keep spending money on this. I told you we hit a kilometer beyond our resource area. That's where this bullseye is here. What we're showing is these east-west veins start curving up to the northwest here, and it looks like they're projecting all the way to the top of our patented claim block here. What we've just done is with this money that we're raising here, and demand was really good, this will allow us to drill out this entire additional kilometer of strike. We've got a whole bunch of assays pending right now. We've been drilling this project still open to the south, and we've got a drill hole down here, which we call the new discovery area, which is protruding near surface. And these will be the next batch of assays that come out sometime in September. We did a visual analysis and we've XRF these, and these look really, really interesting. So I think there could be lots of expansion potential to the south and now to the northwest as well. We've got 2 rigs going. And as I said, we're chasing the veins, and all of our claims in Tonopah West are patented because the veins look like they're going to the north. We staked 20 square kilometers of BLM claims here, and it looks like the vein systems keep running up here. So we've got a RC rig up in this portion doing some scout drilling, and we've initial results are interesting. Tonopah is not only a silver district, it's also the center of the universe when it comes to lithium exploration and development in America. We actually hit some big plumes of lithium clay up there in the cover rocks. Now, we're not looking for lithium, but we have to drill through it to get to the targeted depths, and we seem to be hitting a lot of that. So we've got some assays pending from up there. We're trying to chase the vein system around what we see as the margin of a caldera, effectively the blow off top of a volcano. And we've got assays pending from this. So financing closes at the end of August. We should have more drill results out right after that. From there, we're just deploying capital with the rigs, drilling out a kilometer of strike on the project, and hopefully upgrading the resource sometime soon after. That looks like it's my time, so I'll pass it back to Taylor.
Perfect. Thank you very much, Andrew.